Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Russell 2000 index, ticker symbol RUT. And if you're a follower of the market guys, you'll know that I keep my lines on the chart each and every week so you can see how the forecasts have panned out across the board. And in this case, as I zoom in here, you'll see that last Friday I drew this line saying that early on in the week we would most likely rally. We did that. We've exceeded that rally. And then I said later on in the week we would most likely pull back towards the 20-period moving average. And as you can see here, the markets have been steadily coming lower towards that moving average, with today closing on a red candle right there. And one other thing I'd like to point out here is I wanted to draw your attention to the shadows. These are the vertical lines that protrude from the upper part of the body of the candle. You'll see that the shadows are starting to show signs of selling activity coming in. The other thing is the length of each candle here is fairly narrow. These are short candles known as spinning tops right here and here. And when you have short-bodied candles like that, it's really a sign of indecision. So what I'm going to do is I'm going to erase this line right here, which is from last week. I'll erase this line to clean up the board here for you, making it a little bit easier to see what I'm drawing here. I think next week we're going to continue with this downward trend and move lower again towards this 20-period moving average. So I'm going to leave that in place for next week. And then as you follow along with the report, you can see again how valuable candle charts are as a forecasting tool. And it's something that can be learned. The skills can be honed, and you can polish those skills each and every week as you follow along. And then before you know it, your ability to forecast the markets will become more accurate as time goes on. Now, if I look at the Qs, this is the Nasdaq market, also known as the power shares. You'll see again the lines were left from last week. I said early on we would move up. What I did is I extended this. You see this little section I just added on to the previous week so you can see how accurate the forecast has been week after week. Add that on. I said early on we would rally and then start to pull back. We did rally early on in the week, and then Thursday and Friday, again, there you go. These are the spinning tops. Very close to what's known as a doji, another sign of indecision. So what I'm going to do here is I'm going to erase this line right there, and I'm going to forecast that we're most likely going to pull back again to this support level right here. I'll leave this all in place for you. This is a sign of indecision, like I said before, with stronger red volume, the stronger selling pressure coming in. So that's an indication that the sellers are starting to move in there as well. Now, if we look at the diamonds, it didn't follow suit like the Russell 2000 and the Qs, but we did rally early on. You can see that right there. Did not pull back, but like the other markets, we have these dojis and spinning tops forming. That's a doji. Looks like a cross right there. So I'm going to erase this line, and my forecast for next week is going to be that, once again, a pullback is in order here for a couple of reasons. The dojis are usually found at pivot points, so I think we're going to pull back there. But the other thing you have to consider is that the distance between this moving average and the price is quite wide. We call that a price divergence. And on our website, there's a video link in the video library that explains the rubber band effect. You might want to go there and look at that very short video so you can get an idea of how that works. So there you go. That's my forecast for the Dow. Now, if we look at the spiders, this is the S&P 500, tracks about 500 stocks, of course. We see a bearish engulfing pattern right here, and that happened on Mondays. We had Monday, Tuesday, Wednesday, Thursday, Friday. On last Friday's report, I said we would pull back. I did not expect that bearish engulfing pattern to show up, but it did. And again, we see a doji here, a doji here, a spinning top there. So my forecast for next week, again, like the other markets, is going to be an expected pullback towards that moving average, as the S&P is also showing a wide price divergence from that moving average, so the rubber band is stretched there. Finally, the VIX. The volatility index is something that I keep a close eye on, because what happens here is the VIX is an oscillating indicator that's inversely related to the S&P. I said last Friday that we would most likely rally. We did. We didn't get all the way up to fill the gap, and that doesn't concern me all that much. Let me back out so you can see that gap. There's the gap right there. However, I do believe that the gap will eventually fill. I have consistently staked my reputation on that one, and I'll continue to do it now with you on this report, that I think the volatility index will eventually rally up to fill that gap. What I'm going to do here is I'm going to extend and put a 2-week forecast on this one. You see how this is a longer line than my previous lines that I've drawn, because I think over the next 2 weeks that gap will eventually fill and test that resistance right there. Like I said before, if you'd like to learn more about what we do at The Market Guys, just go to themarketguys.com. Right there at the top, there's a video tab. You can click on that. It will bring you to the video library. And then from there, you can scroll down and look for the rubber band effect. It's the second row down on the right-hand side right there. Again, very short video, give you some insight as to how that works, and most importantly, how you could use it as a tool to forecast the market, as well as a tool that can be used to manage risk. I'd like to thank you again for joining us here at The Market Guys. Stay tuned as we deliver these weekly market reports every Friday. We appreciate that, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.